Hello students, in present video I am going to explain about 8th problem from depreciation lesson. I am taking this question from Telangana State Telugu Academy Inter Second Year Accountancy Textbook. But this video is useful to all commerce students who want to know about depreciation lesson. On depreciation topic, I made 9 videos. Video links are available in the description box. I suggest you to watch those videos first. Then only you can understand this present video. Let us start the problem. Raghava bought a plant and machine on 1st April 2017 for 23,000 rupees and paid 2,000 for its installation. They purchased plant and machine. Machine means what you know. Plant means factory, the premises where we manufacture goods. Fixed asset name is plant and machinery. They purchased this asset on 1st April 2017 for 23,000 rupees and they incurred installation charges 2,000 rupees. When installation charges are given, we should add that to purchasing price, no? Then cost of the asset is 25,000 rupees. Depreciation is to be allowed at 10% under straight line method. Every year 10% depreciation we should provide on this plant and machinery under straight line method. On 31st March 2020, the plant was sold for 8,000 rupees. What is the new point in this problem? Firm sold that asset after using for some years. In previous problems, firm used to purchase additional asset. But in this problem, there is one asset. After using that asset for some period, they sold it. Assuming that the accounts are closed at the end of the financial year, means year starting date is 1st April and the year ending date is 31st March. Firm is following financial year to prepare the accounts. Prepare plant and machinery account. He is asking us to prepare plant and machinery account. Let us see the dates first. Firm purchased one asset on 1st April 17. Year starting date they purchased this asset. So in first year they used 25,000 worth asset for 12 months. From 1st April 17 to 31st March 18 is first year. Second year starting date is next immediate date of this date. On 1/4/18 they have the same asset and in second year also they used it for 12 months. Second year last date 31st March 19. Third year starting date 1st April 19. Same asset they used from 1st April 19 to 31st March 20. And at the end of third year, they sold this asset for 8,000 rupees. This is the question. He is asking us to prepare plant and machine account. For how many years we have to prepare that account? That information is not provided in the question. But we should always remember that we should prepare asset account till the sale date. After that date, even though you want to continue the account, you cannot continue. Because after 31st March 2020, there is no asset. You cannot prepare the account. So we should prepare the account up to 31st March 20. They purchased on 1st April 17, no. So first year, second year, third year. For 3 years, we have to prepare the account. So remember, when there is only one asset and if it is sold by the firm, then he need not to mention the period for which we should show the asset account. Till the sale date, we have to prepare the asset account. Let us solve this problem. When they purchase that asset, debit side we should write to bank purchase value 23,000 rupees. And in date column, write on the purchase date. On the same date, they incurred 2,000 rupees towards installation. For installation charges also we should write to bank. Date is same, 2,000. Now cost of the asset is 25,000 rupees. At the end of first year, on 31st March 18, we should provide depreciation on this asset. Credit side, last date of the year by depreciation account. Calculation is on original cost of the asset on 25,000 rupees, 10% depreciation we should provide. No need to take the months because asset is purchased on 1st April 17. Full year they used. One numerator, one denominator. If you cancel, then depreciation in first year is 2,500 rupees. Then find out the balance carried down. Debit total 25,000 rupees minus credit total 2,500. 22,500 is balance carried down. Put the total 25,000. First year is completed. Come to second year. Date is next immediate date of this date. 1st April 2018. Bring that balance here. To balance brought down 22,500. In second year, there is no additional purchase. There is no sale. So they use this asset for full year. Therefore, at the end of second year, we should provide depreciation on this asset for 12 months. This is straight line method. The feature of straight line method is every year we have to compute the depreciation on cost of the asset. Cost of the asset is 25,000. So here also the calculation will be 25,000 into 10%. You need not to show the calculation. Already we have calculated in first year now. So directly you can write that depreciation amount here in amount column 2,500. Now find out the balance carried down. Debit total 22,500 minus credit total 2,500 is equal to 20,000 rupees. Balance carried down for second year is 20,000. Write down the total here. Now come to third year. Third year starting date is next immediate date of this date. 1st April 19. Bring the balance to balance brought down 20,000 rupees. Then now new point comes. In third year, last date, they sold this asset for 8,000. When we are purchasing one asset, debit side we are writing to bank. When we sell any asset, credit side we have to write by bank. But how that entry is coming we should know now. Listen, we are firm. Think from firm's point of view. Firm sold plant and machinery for cash. Plant and machinery is going, cash is coming. There are two accounts, cash account, plant and machinery account. Both are assets. Both come under real accounts. Real account rule, debit what comes in, credit what goes out. What is coming to the firm? Cash. Therefore, debit cash account. I am writing here debit cash account. Cash account debtor to plant and machinery is going from the firm. Plant and machinery is also an asset. It is also a real account. Real account rule, debit what comes in, credit what goes out. As plant and machinery is going, credit plant and machinery account. This is the entry for sale. If buyer pays in cash, we should debit cash account here. If buyer issues a check, then we should debit bank. While purchasing the asset, we are assuming that firm is issuing a check. So, in case of sale also, we should assume that firm is receiving that amount through a check. Therefore, in debit, instead of cash, we will debit bank account. Then final entry for selling the asset is bank account debtor to plant and machinery account. Out of these two accounts, we are preparing plant and machinery account. It is credited. Therefore, this entry credit side we have to post. Credit side, what to write? Other account name. Other account is bank account. By bank account, we sold that asset for 8,000 rupees now. Write down that 8,000 in amount column. In date column, write down the sale date. In this problem, asset is sold at the end of third year. Therefore, write down the date. Sometimes asset may be sold before this date also. Then that date only we should mention in date column. Now, think about the depreciation in third year. For how many months firm use this asset in third year? From 1st April 19 to 31st March 20. Because asset is sold on 31st March 20 at the end of the year. Means up to that date we use that asset no? When we use that asset, its value decreases. It is called depreciation and we should show that depreciation in accounts. So in third year also we should provide depreciation. When? Not at the end of the year. On sale date we should provide depreciation. In this problem, asset is sold at the end of the year. Therefore, for depreciation also we will write that date only. Suppose asset is sold on 31st January 2020. Then depreciation also we should compute on 31st January 2020 only. Not at the end of the year. This is very important point which you should remember in case of sale. The date on which asset is sold, up to that date only we should provide depreciation. Not on last date of the year. If asset is not sold, then we should compute the depreciation at the end of the year. In any year, if asset is sold, on that sale date we should compute the depreciation. In present problem, asset is sold at the end of the year. Therefore, depreciation also we are going to calculate on the same day, end of the year. If asset is sold before this date, then up to that date only we should provide depreciation. So depreciation date is 31st March 2020. Write down by depreciation. In last year, they used this asset for 12 months now. From 1st April 19 to 31st March 20. 12 months depreciation already we have calculated in previous years, 2500. So again you need not to show the calculation here. Directly in amount column you can write 2500 rupees. In case of sale, another important point is don't compute the balance carried down now. When you should calculate balance carried down? When asset is going to be used for next year. But in third year, we sold that asset on 31st March 20. After that, we are not going to use that asset. Therefore, don't write the difference as balance carried down. Then what to be written here? When asset is sold, in that sale, we may get either profit or loss. That profit or loss on sale we should calculate. Where? Not in the account. leave some space below this account. As a working notes, we should calculate the profit or loss on sale of asset. So leave some space, put the heading calculation of profit or loss on sale. What is the procedure? Take cost of this asset. While taking the cost, if installation charges are given, include them in purchase price. So total cost of the asset is 25,000 rupees. Write down in outer column. From this cost, you should deduct total depreciation. Total depreciation means the depreciation value from purchasing date to sale date. In first year 2017 and 18, depreciation is 2500. Write down in inner column. Second year depreciation is 2500. 2018-19 year depreciation is 2500. Third year 2019-20. In third year also there is some depreciation. Take that value in inner column. These three depreciations if you add, then you will get total depreciation. So total depreciation is 7,500. Write down that below this cost. Now we should deduct from cost price, we should deduct total depreciation. 25,000 rupees minus 7,500. 17,500. This amount is known as book value of the asset, also known as written down value. So book value means what? Cost minus total depreciation is equal to book value. Now this book value and sale value, both we should compare. Book value means the value of the asset on sale date. We purchased this asset for 25,000 rupees now. To calculate the profit or loss in sale, we should not compare 25,000 rupees and sale value 8,000 rupees. Because 25,000 is the value of the asset on 1st April 17. But when you sold that asset on 31st March 20, after using it for 3 years we are selling. After 3 years usage also, asset value cannot be 25,000 rupees. It will get reduced. In first year we used from 25,000, 2,500 value is reduced. In second year we use that asset, another 2,500 is reduced. In third year also we used it, more 2,500 is reduced. After deducting 3 years depreciation, the net value of asset is 17,500. On sale date, the actual value of this asset is 17,500. 17,500 worth property we sold for 8,000. We sold for less amount. Therefore, in this sale, we got a loss. How much loss we got? 17,500 minus 8,000. Then you will get that value. Sometimes they may sell it for more than book value. Suppose they sold this asset for 18,000 rupees. 17,500 worth the property they sold for 18,000. They sold for higher value. In that sale, we get profit. So we should compare the book value with the sale value. And we should observe whether there is a profit or loss in this sale. Here there is a loss, no? When you get loss, first you have to write book value. From that we should deduct sale value. If sale value is more, profit comes, no? In that case, first you have to write sale value. From that you should deduct book value. So book value is 17,500 minus sale value 8,000 rupees. So loss on sale is 9,500. Then this 9,500, which side we should write? Debit side or credit side? That is the doubt. This 9,500 loss, again we show in final accounts. Final accounts contains trading account, profit and loss account and balance sheet. In profit and loss account, we have to show this loss. Which side? Profit and loss account contains two sides, no? Debit side and credit side. Profit and loss account. As this is account, it contains two sides, debit and credit. Profit and loss account is a nominal account. What is nominal account rule? Debit all expenses and losses, credit all incomes and gains. On sale of asset, if there is any loss, as per nominal account rule, we should debit that loss. Therefore, this 9,500 we should show on debit side of profit and loss account while preparing final accounts. Based on this posting, let us frame the entry now. If you want to debit 9,500 to P&L account, while writing the journal entry also, we should debit profit and loss account. Profit and loss account debtor 9,500 to which account is to be credited? This 9,500 I want to show in plant and machinery account also. Therefore, we should credit plant and machinery account 9,500. Then as plant and machinery account is credited, in this account credit side it appears, and as P&L account is debited, in profit and loss account debit side to machinery 9,500 we should write. So remember, in case of loss on sale of any fixed asset, entry is profit and loss account debtor to asset name, plant and machinery account. If you get any profits are to be credited to P&L account now, means reverse entry at a pass. Then entry becomes plant and machinery account debtor to profit and loss account. So as per this entry, credit side we should write profit and loss account. Loss amount 9,500. And when you will get loss? When we sell asset, on that day we get loss. Therefore, in date column you have to write the sale date. Sale date is 31st March 20. Now, two sides put the totals. Debit total 20,000. Credit side also 20,000. See, two sides totals are same. There is no balance carried down. Means asset account is closed. Why it is closed on this date? Because after this date there is no asset. On this date we sold that asset. As there is no balance in asset account should get closed like this. So remember, if there is only one asset in the question and if it is sold after using for some years, we should not get any balance carried down in last year. If you get balance carried down here, then the meaning is your problem is wrong. Asset account should get closed like this. If you want to continue for next year, can you continue this account? No, because from 1 year to another year, If we want to continue, we should start with a balance brought down figure. As there is balance carried down on last date of first year, we are able to continue that account for second year. But here there is no balance carried down. So you cannot continue this account for fourth year. Therefore, in case of sale, he need not to mention in the question for how many years we should prepare that account. Up to sale date, we have to prepare the account. Because on that day, by writing profit or loss, automatically you are going to close that account. You cannot continue that account further. So this is all about eighth problem in depreciation lesson. Hope this video is useful to you. Thank you.